How is it possible to pay income tax at a rate of 60%? Well, firstly, people might think it's not possible to pay income tax at a rate of 60% because the income tax rates are currently 0%, 20%, 40%, or 45%. However, it is actually possible to pay an effective rate of income tax of 60% on some of our earnings in certain circumstances. And this is how it works. If we earn more than £100,000, something starts to happen to our personal allowance. Our income that exceeds £100,000 actually reduces our personal allowance. For every £2 of income over £100,000, our personal allowance reduces by £1. And because our personal allowance is £12,570 currently, that means if we earn £125,140, we will have lost our personal allowance in full. So where does the 60% come in? Well, if you imagine that income between £100,000 and £125,000 or so, that income is already taxed at 40% because it falls within the higher rate tax bracket. So we pay 40% income tax there, but then we also lose our personal allowance as well. And because we're losing our personal allowance, it means that that first £12,570 of income won't be charged to tax at 0. It would instead be charged to tax at 20%. So we pay 40% income tax as we would expect to. We pay 20% because we've lost the personal allowance because of that higher level of income. And when we combine them, there is an effective rate of tax of 60%. Now, once you get over and above that threshold of £125,140, then you jump kind of back down to the 40% again, because the personal allowance is lost at that point. So the loss of the personal allowance can't do any more damage. And you would then remain at 40% until you hit the next threshold for the additional rate tax, which is currently £150,000. There are things you can do about it, which is the good news. So if you are in this position where you've lost some or all of your personal allowance due to earning more than the £100,000 threshold, it's worthwhile considering your options, the main one and the most commonly used being pension contributions. It is possible to use a contribution to a pension to reduce our taxable income for the purposes of regaining the personal allowance. Of course, it's important to seek advice before you do this, but it is possible to actually sidestep around this 60% income tax trap.